Hello everyone, good morning to all. Welcome to the new session of our e-learning class. I am Rashmi Ranjan Mishra, lecturer of UN Autonomous College of Science and Technology. Today I am going to discuss on a subject regarding basic financial accounting. So on today's discussion we are going to discuss that subject relating to final account with adjustment. So what are the different items that are adjusted in final account at the time of finding out the net profit or net loss of the business, as well as at the time of finding out the health of the organization, that we will discuss one by one. Already we have discussed in our previous class some of the adjustment. Now we are going to discuss the other parts relating to different item of treatment at the time of preparing final account. So first I am going to remind you again what is adjustment. The trial balance is a statement of ledger account balance as on a particular date. Final accounting is done towards the end of the accounting period. The trial balance that we consider in the preparation of final account is the one that is prepared towards the end of the accounting period, generally on the last day of the accounting period. There might be a number of accounting transactions which might not have been taken into consideration by the time trial balance has been prepared. The transactions which have not yet been journalized appended to the trial balance are what we call as adjustment. That means in every organization the basic motive is to earn profit. That profit is necessary for taking future decision for the growth as well as diversification. So the owner of every business, they wants to know particularly at a periodic intervals the position of the organization so as to take decision in future. But at the time of maintaining the books of accounts, journal, ledger or trial balance, that do not give the end result of the business. Journal that we prepare or the organization prepare only to record the transaction. The ledger accounts are prepared to know the individual account balance, and the trial balance which is prepared only to check the arithmetical accuracy of the books of accounts. So as these are the process or the cycle of accounting, but that do not provide the final result of the business, that means the profitability position as well as the health of the organization. So the organization, to find out the financial position as well as the profitability position, must have to prepare a final statement. That financial statement is called as a final account. That financial statement is comprised of two statements. One is income statement, that is profitability position, as well as the second one is position statement that shows the assets, liabilities and capital at the end of the period. But at the time of preparing final account, there are some of the items which are already made during that period we have not taken into consideration, or some items that are not incurred during that period but already we have considered that or make that treatment. So the items which are not considered or which are considered in advance, that must have to be adjusted as these are not related to the period, or the adjustment, the items which are not considered that are related to the period. So we must have to consider that items at the time of finding out the net position of the organization. So that items needs to be adjusted. So the items which gives necessary adjustment, that is called as a adjustment items, and that adjustment items we will consider one by one. So we can say that adjustment are the transaction relating to the business which have not been journalized by the end of the accounting period. That means that items already during the period, but we have not considered that. For example, some of the adjustment that related to closing stock or any outstanding expenses or depreciation or goods sent on sale or return basis, etc. So many types of items are there, but that need not be adjusted, that needs to be adjusted, because the organization must have to find a conclusive proof or the final position of the business. So that items must have been considered. If that is relating to the period but not made, we have to consider that. If that is not relating to the period but we have to take into consideration, we must have to be also deduct that, or we must have to be adjust that. So what are the adjustment items that we will discuss one by one. In our previous class we will discuss the 4 items relating to adjustment, that is closing stock, another one is prepaid expenses, second one, third one is outstanding expenses, then the next one is income received in advance or income outstanding. So in our today's class we will discuss the other items what we have not discussed in our last class. So the today's class of adjustment item, first one is depreciation. So first we have to know what do you mean by depreciation. Depreciation means decrease in the value of fixed asset due to wear and tear, passage of time, obsolescence or outdated, etc. So when any fixed asset is used for the organization, but due to the passage of time or due to wear and tear or outdated, the asset value decreases. So what the value decreases, that will be considered or that will be taken as depreciation value. So it is the decrease in the value of assets due to wear and tear, passage of time, obsolescence, etc. Why we have to make adjustment? As it has been made on the fixed asset value decreases by the use of that during the life period or during the production activity. So that needs to be adjusted. First adjustment, since it is an expenses, it should be debited in profit and loss account and the amount deducted from the relevant asset in the balance sheet. That means there are two adjustments. That means as depreciation is made on fixed asset and we use that fixed asset for production purpose or for business benefit, so the amount of depreciation is one type of expenses for the business, that is not loss, because we get benefit by use of that fixed asset. So as it is an expenses, indirect expenses, we must have to take into consideration at the time of preparing profit and loss account. So depreciation must be adjusted in debit side of the profit and loss account. The second adjustment, the amount of depreciation which is made or which is considered in profit and loss account, that amount must have to be deducted from the particular fixed asset at the time of preparing the balance sheet, and on the asset side of the balance sheet the amount of depreciation must be deducted from the fixed asset. The adjustment entry will be depreciation account debit to concerned fixed asset. That means we must have to show on the debit side of the profit loss account. So the adjustment entry is depreciation account debit to profit and loss account. The next adjustment item, that is bad debt. So what is meant by bad debt? Any irrecoverable portion of sundry debtor is termed as a bad debt. That means when the organization sold goods or makes payment to the customer and the amount is not recovered in due course of time. So whatever the amount that is not recovered, the portion of irrecoverable amount from the sundry debtors is called as a bad debt. It is one type of a loss for the business. If it is given in the trial balance, it should be shown on the debit side of the profit and loss account. So when it is given inside the trial balance, we already know that the items those are given inside the trial balance, that items needs to be treated only once. So when bad debt is given inside the trial balance, the treatment for such item is that must have been shown on the debit side of the profit and loss account. But bad debt, if it is given in the adjustment or outside the trial balance, that is to be deducted from sundry debtors in the balance sheet, and the same amount is debited to the profit and loss account. So when bad debt is given outside the trial balance, that needs to be adjusted. That means first we have to adjust the amount of a bad debt or the percentage of a bad debt on sundry debtors directly shown on the debit side of the profit and loss account, and the same amount of a bad debt what it is given outside the trial balance, that must have to be deducted from sundry debtors on the asset side of the balance sheet. So what is the adjusting entry? The bad debt account debit to sundry debtors. This is the adjusting entry that must have been made. The next one is provision for doubtful debt. That means it is a provision created to meet any loss if the debtor failed to pay whole or part of the debt kept by them. When goods sold to the customer on credit, they are called as the debtors for the organization, and the amount which is not received in due course of time, that amount or the portion of amount is called as a bad debt. But after meeting that bad debt, the remaining portion of the amount, the business makes a provision to meet any type of a loss, because if the debtor fails to pay either the whole of the remaining amount or part of the remaining amount, then in that case that is called as a doubtful debt, that may be recoverable, may not be recoverable. So what the provision kept by the organization to meet any type of loss, that is called as a provision for doubtful debt. So what is its treatment? First, it is shown on the debit side of a profit and a loss account. The provision for bad debt, that will be shown on the debit side of a profit and loss account, but that should be taken into consideration after deducting the amount of a bad debt from sundry debtor. The second treatment, it is deducted from debtors in the balance sheet. The same amount of a provision for doubtful debt which is shown on the debit side of a profit and loss account, that is again deducted from the amount of a sundry debtors after deducting the bad debt amount, then the provision for doubtful debt will be deducted in the balance sheet. What is the adjusting entry that will be made? Profit and loss account debit to provision for a doubtful debt. So it is one type of a loss for the business. Being loss, the business must have to shown it on the debit side of a profit and loss account. So for that, the adjusting entry will be made as profit and loss account debit to provision for doubtful debt. So in case of a provision for doubtful debt, there are different grounds. So we have to discuss that different ground and also shows the treatment of that adjustment item. The first one is when bad debt given in the trial balance and further bad debt and provision given in the adjustment, then how we will treat that. The bad debt given in the trial balance is debited in the profit and loss account, already we have discussed, but further bad debt that is added with it and the same is deducted from the debtors in the balance sheet. So this must be taken into consideration. The amount of a bad debt which is given in the trial balance, that is already debited in profit and loss account, but if any further bad debt is there, that must have to be added with the bad debt which is given inside the trial balance. So that is added and the same, that means the total amount is deducted from the debtors on the asset side of the balance sheet. The second treatment, provision, that is calculated only after deducting the further bad debt. That means after deducting the amount of a further bad debt, the balance amount, and on the balance amount the provision which is given, that is calculated, and this provision is debited in the profit and loss account, and the same amount of a provision which is debited in profit and loss account, that is deducted from the debtors on the asset side of the balance sheet. Then the second ground, when bad debt and provision for bad debt that is given in the trial balance and the new provision is given in the adjustment. So in that case, what the treatment will be? The first treatment, the bad debt given in the trial balance is debited in the profit and loss account, and the new provision already added or that will be added to it, and hence the new provision is deducted from the debtors on the asset side of the balance sheet. What the new provision is created, that amount of a provision for bad debt is deducted from the debtors on the asset side of the balance sheet. Then the second treatment, the provision given in the trial balance is either deducted from the debtors or it is debited to the profit and loss account. Then the third ground, when the bad debt and the provision for bad debt is given in the trial balance and further bad debt, new provision for discount on debtor, that is given in the trial balance. Then the treatment is the bad debt is debited directly to the profit and loss account, and the further bad debt and a new provision is added with the bad debt, what the amount is given in the profit and loss account. And the new provision which is calculated, that will be calculated only after deducting the further bad debt from the debtor. That means after deducting the amount of a further bad debt from the sundry debtors, the balance amount, on the balance amount the new provision is calculated, and that new provision is deducted again from the debtors. Then the third, the provision for a discount on debtor, if it is given, then in that case that will be calculated after deducting the further bad debt and the new provision. That means from the previous, the new provision and a further bad debt, when it is calculated, that will be deducted from sundry debtors, and the on the balance amount the provision for a discount on debtor on a certain percentage is calculated, and it should also, further bad debt should also be deducted from the sundry debtors on the asset side of the balance sheet. Then the next adjustment item, that is provision for a discount on debtors. What is that and how it will be treated at the time of preparing the final account. Provision for discount, that is a provision created to meet any loss due to allowing of a discount in next year. So when business is going to allow any discount in next year to the customer or to the debtors, then in that case certain provision will be created only to meet any type of a loss only due to the allowing of a discount. And when the debtor of a current year, only to make the prompt payment. That means in order to take the collection from the debtors promptly, the organization is going to allow certain percentage of discount to the customer to whom the goods are sold on credit, only to meet any type of a loss. So when there is a provision made or discount is allowed to the debtors on a certain percentage only to make the prompt payment to the organization, then that is called as a provision for a discount on debtors. So how that will be treated at the time of preparing profit and loss account? First, it is shown on the debit side of a profit and loss account. As discount is allowed to the debtors, so this is one type of a loss for the organization. And being a loss, the organization must have shown it on the debit side of the profit and loss account. The second one is, it is deducted from the debtors in the balance sheet. The amount of a provision for discount on debtor which is calculated, the same amount that should be deducted on the asset side of the balance sheet from the sundry debtors. And at the time of making that, the adjustment entry is profit and loss account debit to provision for discount on a debtors account. That means profit and loss account, why it is debit? Because it is one type of a loss for the organization. So being a loss, it must have to be debited on the profit and loss account, and the provision for a discount on debtors, that should be credited. Then the next one is provision for a discount on creditors or a reserve for discount on creditors. So when the organization, in order to make prompt collection from the debtors, allow certain percentage of a discount to encourage to make prompt payment to meet any type of a future loss or to fulfill that, to make contingency, that is called as a provision for a discount on debtors. So similarly, when organization purchase goods on credit from suppliers, the suppliers also interested to take collection in ready time, and also they are encouraged to allow certain percentage of a discount. So that is called as a reserve for a discount on a creditor or provision for a discount on creditor. So what is that item and how it is be treated? The provision made for a discount expected to be received in the next year from the creditor of the current year is known as provision for a discount on creditor. So first, it is credited to the profit and loss account because the organization getting discount, that means it is one type of a gain for the organization. So being it is gain, it must have to be credited to profit and loss account. The second one is, it is deducted from the creditor on the liability side of the balance sheet. So what is the adjustment entry for a reserve for discount on creditor? The adjustment entry is provision for discount on creditors account debit to profit and loss account, because it is one type of a gain for the organization. So profit and loss account must be credited, and the reserve for discount on creditor must be debited. Then the next adjustment item, that is general manager's commission on net profit. How the commission on a net profit is calculated, and if it is given outside the trial balance, what will be the adjustment made? First, calculate the notional profit, that means which is not the actual profit, but before charging commission, what the expenditure is there, we have to deduct that amount of expenditure from the amount of income, and that balance or result amount is called as a notional profit. So notional profit is the difference between debit and credit in the profit and loss account excluding commission. That means before charging commission, what the total amount of expenses and income is there, the difference between the amount of income and expenditure excluding commission is called as the notional profit. So how it is be treated? There are two cases for treatment. When commission on net profit before charging commission, then find the notional profit. After that, certain percentage of commission divided by 100 is the amount of commission before charging, or amount of commission before charging such commission. If the commission is charged on a net profit after charging commission, in that case the result amount is notional profit into rate divided by 100 plus rate. So there are two cases, before charging commission, after charging commission. In case before charging commission, the formula is notional profit into rate by 100. In case after charging commission, notional profit into rate divided by 100 plus rate. So this have to take into consideration carefully at the time of preparing the final account, whether it is a case of before charging or after charging. If it is a case of before charging, notional profit into rate by 100. If it is a case of after charging, notional profit into rate divided by 100 plus rate. How it should be treated? First treatment, the above amount which is obtained in either case, that should be debited to profit and loss account, because it is one type of expenses for the business. So business must have to shown it on the debit side of a profit and loss account. The second treatment, it should be shown as an outstanding expenses on the liability side of the balance sheet. Then the next adjustment item, that is goods distributed as free sample. When organization distribute the goods as free sample to the customer or to the other businessman, how that should be treated. So when goods are distributed as free sample, it is called as a advertising or promotion. That means only to encourage the goods or to increase the production activities or to create name and fame for the organization. Organizations are distributed certain amount of goods as a free sample to the customer or to the retailers. So it is one type of expenses for the business. As it is one type of expenses, first the amount of goods which are deducted or which are distributed as free sample, that same amount of goods must have been deducted from purchases in the debit side of the trading account, and the same amount of goods which is distributed as free sample, it is added to the advertisement expenses in the debit side of the profit and loss account, because goods distributed as a free sample is called as a advertisement. So it must have been added with the advertisement expenses if it is given inside the trial balance. Otherwise, simply we can say it as goods distributed as free sample on the debit side of the profit and loss account. So for that, one adjustment entry is there. Adjustment entry is advertisement account debit to purchases, because advertisement it is one type of expenses. So expenses means that must have been debited. So advertisement account debit to purchases account. Then next item, that is loss of stock. What is that? Stock loss due to any accident is termed as a loss of stock due to any normal or abnormal reason. When any amount of goods or stock that is lost, then that is called as a loss of stock. It can be divided under three heads. The first one is insured stock loss, and the insurance company give the partial claim. That means when a goods lost and that is insured, and a company gives a partial amount of claim, that is one case. Second one is goods lost, insured, company pay full claim, goods lost but not insured. So there are three grounds. First one is insured stock loss, company gave partial claim. Second one, insured stock loss, company gave full claim. The third one is uninsured stock loss. So if any of these case is there, the total loss is credited to the trading amount, whether that is a case of a partial claim or full claim, or that is uninsured stock loss. That whatever may be the case, the amount of loss or the total loss that directly credited to the trading account, and the actual loss that is debited in the profit and loss account, and the claim amount is shown on the asset side of the balance sheet. If it is a case of a partial claim or a full claim, the amount of a claim made from the insurance company is shown on the asset side of the balance sheet. So three different cases, and the alternate treatment is there. The first one is insured stock loss, company gave partial claim. The first treatment, total is credited to the trading account, the amount of loss. Then actual loss which is made, that is debited to the profit and loss account, and the claim amount which is made, that is shown on the asset side of the balance sheet. Then second case, insured stock loss, and the insurance company gave the full claim. In that case, the total amount of loss that is directly credited to the profit and loss account, and the claim amount that is shown on the asset side of the balance sheet. If it is a case of uninsured stock loss, that means stock lost but that is not insured. In that case, the total that is directly credited to the trading account, and the next one is actual loss, the amount that is debited to the profit and loss account. Then the next treatment, goods taken by the proprietor for personal use. The treatment is, first it should be deducted from purchases on the debit side of the trading account, the amount of goods taken by the owner for personal use. Then second treatment, it should be deducted from the capital on the liability side of the balance sheet, because it is one type of a drawings, because goods withdrawn by the owner for personal use is called as a drawings. So the amount of a goods which is withdrawn by the owner for personal use is deducted from the capital on the liability side of the balance sheet. Then the next one is goods sold on a sale or return basis. Their treatment is selling price is to be deducted from sales and a debtors. Then the next one is the cost price, which is smaller, that should be added to the closing stock in the credit side of a trading account and asset side of the balance sheet. Another adjustment item, that is wages include for erection of a machinery. The treatment is, it is deducted from the wages on the debit side of a trading account. The amount of wages which includes for erection charge of a machinery, the same amount is deducted from the particular wages on the trading account, and again that amount is added to the machinery account in the asset side of the balance sheet. There is one note, if depreciation is there, then it should be deducted from only the increased value of asset is there. That should be taken into consideration. So these are the some of the adjustment items that we have discussed in today's class. So this is our today's class discussion. Hope you students have all cleared about my adjustment items at the time of preparing final account. If you students have any doubt, then you can give your comment in the YouTube comment section. Thank you. Have a good day to all of you.